Dave, do you support the decision by Australia to take China to the WTO?
Yes, absolutely, Danica, and it's good to be with you this morning. It is quite a complex issue, but when we look at the facts, when we look at the information, and when we look at how we've, managed international trade rules for many years and their market exposure for Australian agricultural commodities, we absolutely believe and support the Australian government's approach of taking this specific case to the World Trade Organisation.
Are you concerned that this could be a lengthy standoff between Australia and China, and what sort of an impact could that have long term?
Yeah. We're under no illusions that this is going to be a quick fix. This will take time. The World Trade Organisation has quite a lengthy but quite a robust process for dealing with these type of trade disputes, and when there's a difference of opinion amongst two trading partners, that is the process. It does take some time. It may be years. It's unlikely to be months. But it's important to also recognise that by starting to step through this process within the World Trade Organisation, it does provide another avenue for those bilateral conversations between the Australian government and between the Chinese government to look at and see if there's an off-ramp, to look and see if there is an opportunity to resolve those differences outside the World Trade Organisation. We know they've been difficult to come by, some of those bilateral conversations and that engagement. So going through this process provides us another avenue for that, as well as actually stepping through the legal process. It's not a political process, it's a legal process under international law to test if the assumptions made around the allegations of dumping of Australian barley and subsidisation of Australian barley are actually incorrect or factually incorrect under international law.
Has Australia been too reliant on China?
Australia's barley industry in particular has had significant exposure to the Chinese market. It's provided great opportunities for Australian barley growers, for the Australian export barley industry. It's been a great opportunity. We've exported sort of in the vicinity of 60 to 70% of our barley exports have gone to China. But China was paying a premium for our malt barley. It is the largest malt barley market in the world, and was paying a premium price well and above a lot of the other markets. So while a lot of barley was sold into China, I think it's also really important to remember that the average Australian farmer grows a whole range of crops. And if we think about some of the other crops they grow, whether it's wheat, there's only around 5% of Australia's wheat goes into China, and we service a whole range of other important markets with wheat, whether that be Indonesia and Vietnam, for example, or Japan as larger markets. If we look at canola crops, the third largest crop from Australian farmers, the majority of our canola goes into the EU market. If we look at our pulses, beyond that the average farmer grows, they'll have a mixed farming operation. The majority of that goes into the subcontinent, and when there's not tariff challenges in India, it's going into countries like Bangladesh and Pakistan. So we do have a really diversified mix of Australian grain export markets, but it's important we continue to look at how we can capture even more market premiums on the global stage for all our grain products.
It's a big premium, as you said. What sort of an impact is that 80% tariff having on grain growers? What's the cost?
The 80% tariff effectively locks Australian barley out of the Chinese market. So instead of receiving those premiums that were paid for the malt barley going into the Chinese market, we now have to find other international markets. Now, those other international markets are really good, supporters of Australian barley, and they love to access Australian barley. So we'll have no trouble selling the crop, but we'll be selling it at a lower price. So, diversifying by volume is an easier task than diversifying by value. So if we think around that price drop by the loss of the Chinese market, we're looking at around $40, $50 per tonne of barley. So once we look across the scale and size of the Australian barley crop and what we've sold and exported into China in recent years, for this year alone, we're looking at around a $500 million year loss. And it's a tariff that's in place for 5 years. So that accumulates over those 5 years. So just for the price of barley, the impact of not being able to sell to China has around that $2.5 billion impact on the Australian barley farmers.
Billions of dollars. That's a big loss, a big impact on farmers. Dave McKeon, we have to leave it there. Thank you for joining me.
Thank you, Danica.